Hi, everyone. I wanted to weigh in on the GDP Now metric that was published on Monday and has now been updated as of today. The number has moved pretty significantly, so I wanted to make sure to dive in to really understand what was causing that movement. Before talking about Q2, though, I wanted to mention that as we closed out Q1, this GDP Now model was forecasting GDP declines in Q1 far greater than what the final published numbers are coming out of the Bureau of Labor Statistics. In fact, GDP Now had the model showing a decline of 2.7% in their standard model and a decline of 1.5% in a gold adjusted version of that. And this corresponds with the decline of 0.2% that is currently being estimated by the Bureau of Labor Statistics. So as we started Q2, the very initial estimate for Q2 out of GDP Now on April 30th was growth of 2.4%. They've now gone to that gold adjusted model as their standard. So what that suggests is their Q1 estimate closing was down 1.5%, jumping to growth of 2.4% in Q2. And from that April 30th starting point of 2.4% growth, the number has gone up. The first real bump was on May 30th as the personal income and outlays information was brought into the model, and this raised the growth projection to 3.8%. And as you recall, that was just data for the month of April. Then the May PMI information came in on Monday, and that is when the metric went to 4.6% growth that Steve is mentioning here. Today, with some new international trade information, it's now gone back down to 3.8%, but nonetheless, key question is, can we expect this 3.8% growth to happen? My 2 cents is that it is likely a bit inflated because of some of the drivers of the metrics that we know have come in. For instance, in the PMI number, a heavy driver of the strong results there was a build of inventories. And if those inventories don't turn into output, that's likely to negatively impact this number. So with May and June data still yet to come into the model, I would expect that the number is going to change considerably. And my 2 cents is it's likely to go down, but I am uncertain if it would ever be enough that would trigger it down to a negative territory. Additionally, with that wide swing from Q1 to Q2 being so much more negative than the BLS numbers and now looking so positive, it seems that there might be some timing differences that are causing a swing between the quarters. But on the surface, it looks like we will end Q2 in positive territory. Let me know your thoughts.